You're listening to the Ground Transportation Podcast with Ken Lucci of Driving Transactions and James Blain of PAX Training. Learn how you can build a thriving transportation business with real profits, repeat clients, and enterprise value. And now for your hosts, Ken and James.
Hey there, everybody, and welcome back to another exciting episode of the Ground Transportation Podcast. I am super excited about this episode. Not only do I have my co-host, Ken Lucci, financial genius, sales, M&A expert. I could probably do a whole podcast on anything Ken could do. Ken, good to have you back.
I'm so happy to be here with you, especially also with our guests. But looking forward to this one.
Yeah, I am super excited about today. We have Tim Delaney, the president of Lancer Insurance, which is a division of Core Specialty. Guys, I got to tell you, when it comes to insurance, if you haven't heard of Lancer, I'm very sorry, you probably don't have insurance. Lancer's been doing this forever. I'm lucky enough that at PAX Training, we actually partner with them to have some of their training available to our members. I can't say enough about these guys. And Tim, I can't say enough about you and how excited we are to have you on the podcast. Welcome to the podcast, buddy.
Thank you very much. Thank you for having me, and very happy to be here. I appreciate everything you guys do for the industry and the messages that you put out there. So thanks very much.
We try. From my perspective, people have been calling us since 2018 to help them sell their companies. And when we first started, it was, I'm past the point of retirement. I want to sell my business.
Yep.
And in the pandemic, it was business has stopped. I need to sell my business. And it seems to me now the number one reason people are calling us is because there's been massive increases in their fleet insurance. But I want to dispel a myth. The myth is that the increases in insurance are because of the insurance carriers. So yeah. I would like you to address that, because people think that commercial fleet insurance is extremely profitable, but from everything I read about the insurance industry, that's not the case. So I'd like you to, if you can, dispel that myth first.
Yeah, well, it's pretty easy to dispel because, the commercial auto segment of property casualty insurance hasn't been profitable for the last 14 years we're going on.
Say that again, wow. Tim, because I think they need to hear it, right? Everybody wants to know what boat you bought this year, right? But I think what you just said is really important because people don't realize it. Say it again.
Well, so the commercial auto part of the property casualty insurance world has not been profitable for 14 years. And particularly to the segment of ground transportation, that holds true. There are certain niche segments within that, but everybody's subject to the same trends, right? And the easiest one to point out to people who aren't in the insurance industry or transportation industry is attorney advertising, right? How much more of that is there today than there was a long time ago? So that, that's kind of something you can pick out visually. But what's behind that is there's way more attorney involvement in claims than there used to be 20 years ago. Those attorneys are way better funded. They have a way better playbook. And that's a big part and by funded, there's actually even third parties that will fund their litigation for a piece of the action. And that's really only the surface level of what's happening. If you dive deeper, simple things like a small accident that dents a bumper 20 years ago was a couple $100 to fix the bumper. These days, there's cameras and software and electronics, right? So that's kind of a natural inflation that is built into the system. Then medical costs, right, which tend to outstrip general inflation as well, kind of has driven the costs up on the liability side when there are injuries. And then add on top of that, the lawyers not only getting better at using those medical costs and the medical system to inflate the cost of claims, they've just gotten even better at using the legal system with things like time limit demands and the threat of juries who are way more willing to give away large sums of money today than they traditionally have been in the past. So all of those ingredients go into say the cost of claims are going up, and for insurance companies, I think to your guys' point, a lot of people overestimate our position in the chain, right? We don't necessarily set rates. right? I mean, we take pools of homogeneous risk, we figure out what the claims cost, and we reflect that back onto the industries that we're serving, right? So the increased claims costs are external to the insurance industry. We're just kind of reporting the news. And
Sure.
if I had to sum it up for ground transportation operators, in a big way, the legal industry is it'd be extreme to say robbing your money, but that's kind of what they're doing. And they're driving these costs up.
And specifically in states that don't have caps, and I'm just going to say it, in blue states where there's no tort reform, no hope of tort reform. And isn't it true that for every dollar you take in the commercial on commercial fleet, $1.04 is paid out?
Well, if you go by the macro numbers as of year end 24, and even at 6 months 25, it's more like $1.12 goes out.
Wow.
Right.
So,
So-
we measured combined ratio
Sure.
is the word we use in insurance. So 100% combined ratio is break even. Anything
Yep.
below that is margin, anything above that. And commercial auto has been running, up around between 108 and 112 now for 13 years in a row, with, one exception, the COVID year, which,
Sure.
isn't really bad. Yeah.
Different animal.
So the other misnomer I think that's out there, and the blame of the insurance agent, the insurance carrier, which is totally misplaced, and the other myth that's out there is that my loss runs aren't bad. I shouldn't have an increase. They don't understand the insurance ecosystem. So can you give us just a brief on how insurance works, the ecosystem? It's not just your loss runs. You're part of a global ecosystem.
Right.
Perhaps even touch on reinsurance and what's going on in reinsurance as well.
And Tim, I want you to add one thing to that as well, if you don't mind, because the other thing that we hear all the time is, well, if we can just get them to look at only us, right? If we can just get it down to just like our segment or our industry or our vertical, that's something we've heard a lot lately. So I'd also be curious to hear your opinion on how that plays into it.
Sure. So let me chip away at that one piece at a time. So insurance in general, right, is you try and find, some group of homogeneous risk, and you spread the claims, that certain portions of that pool out over the entire pool. And, everybody gets to pay a smaller amount to cover potential claims that they would have, right? That's insurance 101. So the concept of somebody saying, well, just my loss runs aren't bad. I haven't had any claims, so why do I deserve a rate increase? There is a pooling aspect to it, right? And it's particularly pronounced in commercial auto. In personal lines, like what we buy for the cars we drive on a day-to-day basis, the limits are a lot lower. Right. So, those will be, quite sensitive to your particular risk. If you don't have claims, it can probably, stay pretty even over time, or at least the pooling effect, meaning, when the entire environment of claims changes, the amount that it affects each policy can be spread pretty far and wide, because it's also a big pool. The problem in commercial auto is limits are large, right? Generally $1 million or $5 million on buses.
Yep.
And back to, what we covered already, where the problem right now is litigation, abuse, or, growth in costs, however you want to describe it. That problem exists across, the big limit world, right? The stronger the attorneys are, and the more tools that they have, and the more they can inflate costs, any one claim can get up to as high as $5 million, which obviously, as an insurance company, not everybody can pay you back that much money when they have that. If you're
Yep.
a 3-unit operator, it's not like you can pay the insurance company back, even over time. So, what that means is, for an insurance company to expose their limits, whether it's $1 million or $5 million limit, they need to have a certain comfort that they're collecting enough money across the pool of everything they write, in the eventuality, that a certain segment of them have a claim, and everybody's subject to that, right? it's hard to explain when somebody has loss runs. They haven't had a claim where they say, well, I'm paying for everybody else's sins. And, to an extent, that's true. But I would say for any insurance company, there's still a lot of individual underwriting baked into any pricing, right?
Mhm.
Even across the same market, there is a portion of it that's dependent on their opinion of your operations, on the claims that you've had, on the type of work that you do, the driver profiles, and everything that goes into the underwriting. But at the end of the day, large claims are very unpredictable. Anyone can have them, right? Because it doesn't even necessarily have to be your fault to have a claim that your company can be found responsible for. So if you want to have an insurance company cover you for those types of limits, they have to bake in, a certain amount for those excess claims, which is where all the problems we'll probably talk about throughout this podcast exist. The cost of claims are going up dramatically, and insurance companies for going on 14 years of not collecting enough money to pay for them.
And during that time, your cost to reinsure, because you don't bear the burden of all the risk. There's reinsurance as well, correct?
If it differs by carrier. We tend to not buy a lot of reinsurance. And the reason for that is, if you talk about, I don't know how deep we want to go into the insurance world, but a book-wide purchase, treaty
Mhm.
reinsurance means it covers everything that you write. Facultative insurance is when you buy it for one risk, right?
Gotcha.
So on a treaty basis, to buy reinsurance is very tough in a volatile line that has big limits like commercial auto. Say in the bus business, because of the 5 million limit, and it's a pretty small industry, results can be volatile over time. You can make money over time if you have the gumption to stay in the business and not get nervous when you do have the claims. But it can be volatile, and when the claims go up, you have to really have confidence in your underwriting and claims handling. But in terms of buying reinsurance, a reinsurer who's looking at that book of business and that volatility is probably going to price you to your worst year.
Yep.
Right. So
Why wouldn't they?
Well,
they have
and
to.
take a step back for us, Tim, because we've talked about it before on the podcast. But can you give us just a brief, like, if I don't know what reinsurance is and I'm listening now, can you kind of tell us a real quick, just to kind of bring them up to speed on what it is, why you need it, or why you would use it?
It's a great point, and it's insurance for insurance companies, right? So if you build up, you sell insurance to 100 different companies of any sort, your potential exposure can be pretty high. So depending on how much capital you have as a financial institution, you may choose to increase your ability to write business by bringing in a partner to share the risk. So you're basically bringing in their balance sheet to match up with your balance sheet to expand your ability to offer insurance. But so when that reinsurer marks you to the worst year, that means that you're going to be paying them for your worst year in your good years, right?
Yep.
And so you're giving away a lot of your profit. Now, there's reinsurance is a long discussion, and there's a lot of reasons to buy them and a lot of ways to buy it. But at Lancer Insurance Company, we were always kind of in for a penny, in for a pound. If we think we know this stuff and we're going to get as involved with loss control and underwriting and claims and all the touching that we do, we want to be fully aligned and have full confidence in the fact that we know what we're doing and put our money where our mouth is.
How long have you been writing in the livery space?
Well, the bus business started in '85. The livery business started in the mid '90s.
Yep.
And that even will be loosely defined because we started in the New York area, really in what we would call the black car space.
Sure. Yeah.
And then through that experience, kind of learned that there was this luxury niche,
Yes.
the word that we would use now,
Yes.
that tend to be owned by guys that really care about the service they're providing. It is a high level of service. It comes with training. There was a higher level of vetting on the drivers, and all the types of things that work into a good risk. And we, towards the end of the 90s, settled into that niche, which ended up, growing, being a great pick because it was a good business and has grown and changed many times. But we've been able to stick with the industry and still like the outlook.
Yeah. So earlier, we mentioned kind of this idea of the risk categories and commercial auto and everything there. Now, I'm lucky enough, I already know the answer to this question, but, we hear a lot about this big segment, right? Like we're being lumped in with everybody. We're paying for everything that everybody across is doing. You guys don't fall into a category of a insurer that's insuring everything under the sun, right? If I call Lancer right now and I'm like, hey, I got a 17-year-old daughter that needs insurance, right? Once that guy is done explaining to me why you don't do it, it's gonna be okay. But tell us a bit about what does it look like in terms of the categories you've picked, the ones you work in, and talk to us about this issue that we're seeing where people are saying, kind of like we talked about earlier, well, I'm paying for the sins of everybody else. What does that really look like in terms of those risk categories? And where does a Lancer live kind of within that space of commercial auto?
Sure. It's a great question. It's one that I've heard a lot of times, for over a decade. And, the quick answer is nobody's lumped in with everybody else. All of the issues that are going on in litigation and the medical world and everything else, it does apply to all commercial auto. But I think sometimes that misunderstanding is probably born out of how the message was delivered, whether it was at a conference or by the broker or anything. But all insurance companies have to, at least in commercial auto, have to file forms and rates with every insurance department in every state, right? Remember, insurance is not federally regulated. It's regulated by the states. And when you do that, you have to do that with different class codes, down to vehicle type. So it's not like you take a trucking filing and underwrite a taxi or a limo with it, right? You have to follow very, in my opinion, probably overly specific filings that you have in every one of those jurisdictions. So there's no way that you can lump everybody in. But I think the sentiment is born out of how the message is delivered, which, isn't completely wrong in that all of these bad trends, right, with, be it legal, medical, or anything else, it does apply to all of auto. Yeah. The plaintiffs bar has figured out that auto cases are very easily replicable. Maybe we'll get to a point where we'll go deeper into the list of why. But for all the people that you and I serve, it's particularly pronounced because they're a bigger target because they have higher limits, even than trucks generally.
Well, and talk about that for a second, Tim, because I think that's something that gets lost as well. Because anybody that doesn't know this on the podcast, right? If you're registered, I can go look up your limit, and I know your limit right now as Joe Blow on the street. So can you talk about how that kind of sets them apart from some of the others?
Well, it sets you apart from everybody else on the road, right? Because they might have, in some states, you can have 15, 30 limits on a private passenger vehicle. So if an attorney gets their hands on a case where there's even 1 million limit, that's, more exciting than a lot of stuff that comes through his door. So, at Lancer, we do have a smattering of a lot of different things. I mean, our biggest businesses are passenger transportation, but we do have smaller businesses of, some local and intermediate trucking in certain areas, and we have a little bit of long haul trucking. And one thing I can tell you is the trucking world is multiples, many, many multiples of the size of the passenger transportation market. Yeah. And the trends that we're seeing across that book, across the country, are even way worse right now. And I think that's because the plaintiffs bar, I mean, you can Google it. They have seminars and instruction booklets and everything about how to teach new attorneys how to go out and target trucking companies, right? And some of the things that are counterintuitive, that also applies to passenger transportation, where, the FMCSA website with all the safer scores and public transparency on inspections, all that is great. It's, we always look at it as helpful to our underwriting, but plaintiffs' attorneys have gotten good at using that stuff to make everybody look bad. It's like, you had 6 inspections and 3 of them had violations, right? And it kind of adds, they make things sound in context, worse than those of us in the industry know that they are. And it all comes down to how it would play in front of a jury, right? And gives them more ammo to drive up, settlement of cases, and certainly for the small percentage that gets tried, bigger verdicts.
Part of my frustration when I talk to clients is they think that, frankly, it's across the board. The new operators, because there's practically no barrier to entry in the space, they don't take safety seriously. They think, well, I didn't have an issue getting insurance the first year. And then it's the older operators that, well, I've been doing this for 30 years the same way. I think the reality is that we're in a permanent hard insurance market. Am I right or wrong about that?
Well, the fact that rates have been going up in passenger transportation for 14 years is I don't know of another instance in the history of insurance where something continued that long. Usually insurance goes in cycles, which,
Sure.
isn't necessarily tort reform or everything, Jim. It also has to do with interest rates and the other
Sure.
ways insurance companies make money. But, this has been, it's not a cyclical hard market. It's been a hard market because fundamental change in the cost of the claims, right?
That is, you just said a mouthful.
Yeah.
It's fundamental cost in fundamental changes, permanent changes in the cost of claims. So, and my whole point is, people are saying, well, it's going to have to go back. No, it's not, because the cost to fix an electric vehicle is almost double what a combustion engine is. All of the electronics in the vehicles now, you hit a mouthful. Back in the day, I can remember it cost me $250 to replace a chrome bumper on 1987 Cadillac Fleetwood. Cadillac DeVille. I remember it like it was yesterday. I mean, you couldn't replace the bumper, the plastic housing now for that, or even around the license plate. So, when I talk to older operators, I say, your very issue is that your mentality is, I'm going to do it the same way I did it yesterday or the day before. Talk to us about, and I want to get real. If you had a brother-in-law that had his personal income and wealth tied up in this space, that owned a fleet, what would you tell him for best advice?
And you like this brother-in-law, Tim. You really like this. You really like this. You really like him.
In case they watch this, I'm very lucky with brother-in-laws. Love them all. But what I would say to them is, you have to go all out on safety. And I don't mean that just in checking boxes and saying I'm like, you got to have cameras, you got to have telematics, you got to have driver training, like a lot of the messages that you guys put out. And be like, a portion of that, of course, it's in the interest of true safety and preventing accidents, right? That's obviously paramount. But, one thing I see, even in people who work pretty hard at that, you have to have a little bit of the mindset to say, all of this is also in the interest of making me defensible for when I have a claim, right?
Yep.
So, and that, is kind of the backup stuff, like, documenting processes and documenting training and having follow-ups. You have to really go to the nth degree so that if something really bad does happen, you'd be like, there's no way, there's nothing else that we could have done, to prevent this, right? But anyway.
No, look, we had upon it. James and I were having a conversation. Contrary to popular belief, we do talk outside this podcast because it is a full-time job.
Lots of yelling.
The analogy I use is I'm turning 60 and I go in for a health exam, and the doctor says, you've gained a little weight, and by the way, you're pre-diabetic, and by the way, your blood pressure is up a little bit, which are all true, by the way, because of the clients that I have. Anyway, no, that's only kidding. And they say to me, you need a health regimen. So my answer is I go out and buy an Apple Watch.
Right.
And on my next visit, I say, you see, I have an Apple Watch. But the
Right.
doctor says, well, your stats are still bad. You haven't changed anything that you're doing. So
Mhm.
that analogy is what I hear people say, well, I have telematics. Well, I have cameras. And your
Exactly.
message is very straightforward. All in means all in,
Mhm.
meaning document all your safety processes, document all of the ways you've changed the behavior of your drivers and how you've made safety a culture. Okay.
Mhm.
You hit the nail on the head. It's not enough to check the box. Okay.
Yeah.
Well, I have telematics. Okay. Well, what do your drivers score? What? Tell
Right.
me yesterday, what does the reporting say? How many guys did you have that are doing harsh braking? Huh? What? They're just not using the telematics
Yep.
to change the behavior and to create the culture of safety. A client's been in the business for 30, 40 years, basically just get kicked out of his captive. Okay,
Wow.
because he went through the trouble of a captive. And I do want you to touch upon captive because,
Sure.
there's some messaging out there that scares me. Okay. Because it's not the solution for everybody.
Although it's
So
billed that way often.
it's totally built that way. There's no easy solution here. And I'm tired
Yeah.
of the people who are peddling the fact that there's an easy way to fix this. There is absolutely not. But it starts with changing your behavior as an owner where to go from the idea of, well, we haven't had an accident, so we're doing something well. Guess what? You're overdue. But anyway, so this guy, goes through the process of the captive, puts whatever money aside, and then he literally falls down because he doesn't do the internal what he should be doing in his company. And he's like, well, I thought when I invested in the captive, I'm like, again, it's like investing in a healthy lifestyle and
Right.
investing in, well, I go to church. Well, do you really read the Bible? I mean, that's what it comes down to. So I think it's changing behavior, and I think it's making safety in every single day part of your business and part of changing the behavior of your drivers, your dispatchers, everybody. Everybody. You can't be pushing these drivers to stay on the road longer than they should be that's safe just because you have a trip that you haven't filled. And at the same time, you cannot change the behavior of your IOs if you don't hold them to the same standard as your in-house drivers.
Yep.
Talk a little bit about the use of IOs, and frankly, that doesn't change the risk of the company that's in business.
No. When we do our underwriting, we do a lot of work on vetting drivers. Um, one of the things we kind of offer as a value-added service is we've been doing it so long that our database of drivers has a lot of stuff in it that a normal MVR wouldn't show you.
Yep.
And drivers tend to pop up all over the place.
Yep.
Yep.
So when a lot of our insureds send stuff in, it at face value checks all the boxes, and then we'll have to let them know, this person can't be put in an insured driving status with us. You can't always say why, but that's information that we have, that helps. So as far as IOs, the industry has kind of gone back and forth on this, in
Yes.
a while.
Oh yeah.
Defining the employment status isn't really my place, but I think one of the risks that's probably unmeasured and unpriced in out in the marketplace is how much growth there's been in the amount of business that people farm out to other businesses.
Absolutely.
Right?
Oh, it's huge.
Absolutely.
It's
But
huge.
the
And
message has to be, if you expect a certain level of safety of your in-house drivers, you have to extend that to everybody that you farm to.
yeah,
Because
and
you're still liable. You are still at risk.
you're big time liable, right? It's called stacking of limits on our end. And we've tried to share, there's legal things to be careful of, but we've tried to share some simple best practices to where anybody you're going to do farm out business to as an affiliate, make sure you do a little bit of diligence on their safety. Make sure that they have, the same insurance limits that you have, because that's been a problem in certain cases. If you have 5 and they have 1, you create a little bit of a vacuum towards your limits legally. You want to make sure you put some thought into the agreements that you have with all them. Like, if I farm out a job to you, you can't farm it out to somebody else, right? Because then
Right.
that's another level, and that's happened
Right.
too. So where everybody in that chain has had to pay.
Yes.
So, and then, making sure the indemnification agreements are correct. Some other really simple things, like even if you check that they have the same insurance, make sure you check again next year, right? Insurance tends to renew and change, like some really, really simple stuff. But that is definitely an exposure that has gone up dramatically over the past 10 years. And really, us, the insurance industry, hasn't really figured out how to get our arms around that, right? How to price for it.
Right. And the reality is, the guys that are out there now I do affiliate work. I farm out work. I provide transportation all over the world. Your reality is, you might as well just put your house on the line, because if you're not doing the vetting of these people, and it makes me laugh. James will tell you that I have a real problem with Facebook, right? First of all, half my owners hang out there all day, and they tell me they don't have time to go out and generate proactive revenue, and everything is low price. And the second thing is, they look for their affiliates on Facebook by saying, I have a ride tomorrow morning at 6:00 in the morning at Richmond. Who do we have?
Yep.
I mean, are you out of your mind?
Yeah.
Why don't you just put your house up? Okay.
Well, but it
Because-
goes deeper than that too, Ken, right? Because I talked to someone who farmed something out to an affiliate, then the affiliate farmed it up to an IO, then the IO crashed the car, and it came all the way back up the chain, and they had no idea, right? They thought that their affiliate was handled. They thought their affiliate was good. Well, turns out the IO's insurance wasn't that great. Well, now all of a sudden, right back up the chain.
It's funny. The lawyers have a way of finding out who's got the best insurance.
They are going to find it out, and they're going to get it all on the table. And not to go too deep into insurance policies, but there are issues in those scenarios, where a policy form could be symbol 7 only, which slows down the flow between them all. But in
what
the
is
big picture,
what is symbol 7 only? Translate that into English for the rest
so
of us.
that's named vehicles only, right? Where if you have 7, 8, 8, and 9, symbol 8 and 9 would be hired non-owned autos, which is where the affiliate work comes in.
Yep.
So there's a lot of issues there. The employment status of it, which was kind of an old issue, that everybody worked themselves through and went back and forth a bit. That's one thing. I think the insurance risk that sits out there today is just what we hit on the affiliate stuff. And there's a long way to evolve for the insurance industry and all the operators to get their arms around that risk, because Ken's right. In a real bad circumstance, your house, if you're the owner of a company, all the assets of the company and the personal assets of the owner can come into play. And we have seen that.
Well, and the corporate veil can be pierced for negligence, and they will find it negligent that
Easily.
You didn't vet this. What was your relationship with this affiliate? Oh, I found him on Facebook 12 hours before the freaking trip.
Yeah.
I'm not supposed to. Tim, I'm not supposed to swear anymore on the podcast.
If it was
because
12 hours before the trip, that they might count that as due diligence, because I've seen them as close as 5 minutes, and it kills me, right?
Exactly.
It kills me.
Crazy.
I mean, it's funny because on our level, we've even gone as far. We've built a directory. You can literally go to the PAX website and look up everybody using PAX, right? You can, and it's just as quick as Facebook. I promise it loads just as fast, right?
Mm-hmm.
There's so many tools that are out there and available that don't get used. And one of the things that Tim, I'd like you to talk about, because I know you guys do a great job of it. What about kind of the other side of this spectrum? I see a lot of operators that work to really do the right thing, but then when it comes time for renewal, they're not really putting that forward. They're not really saying, hey, here's our training program. Here's this, here's that. How much of a difference does it really make for these companies that are actually out there trying to do it all right? Is that something where there's a way that they're able to kind of put that foot forward and show that to underwriting? I know it's again, you guys are tied to state law, but and you don't do discounts generally, but how does someone that's getting it right, doing it right, how do you actually put that to work, so to speak?
So there's a couple things there. I mean, the answer is yes. Putting all those things together and getting them to your underwriter is extremely important, right? You should always be putting forth everything you're doing to keep claims low and the cost of the claims that you do have low. A part of that job certainly falls on your broker, right? They're supposed to do a certain amount of diligence and have a sense of what underwriters want to see and get them that information. And then how it goes to work on our side, you said like you don't give discounts. There are, discounts probably not the right word, but there's a lot of things that we look at that all go into the soup and affect the price.
Yep.
I always say over the past, probably 10 years, when you talk about cameras and some of the different fleet management systems, a lot of times some people want a satisfying answer like, well, if I have this system, how much does my premium go down?
Oh, that's my whole life, Tim, right? I hear that all the time. I'm going to buy packs tomorrow. How big a discount do I get? And it's like, okay, are you going to use it? Are you going to apply it? This is not you bought it, so they give you a gift.
The long answer is, well, we have to see what you do with it and then the effect it has over time. But even the short answer, even if I was to say, hey, we're going to, that counts as 5%, against your premium. What if that's in an environment where rates are going up by an average of 8%, right?
Yep.
Your rate has still gone up. And from a buyer's standpoint, that's a very unsatisfying thing to say, well, where's my 5 points? Be like, well, it was 5 points off the 8 that it was going up. So that's always a positioning challenge that we have as in the insurance industry. But the answer to your question is it does all go into the mix. And at Lancer, most of the insureds we have in passenger transportation, we go out and physically visit them and inspect them and look all that. And that's a big part of our underwriting. And, it forms a big part of our.
Well, your value add is better than anybody's in the space. I mean, your guys are available, you're proactive. And without naming any names, I know of a company that you've insured for years that actually did get a reduction because they launched a massive safety program 2 years ago. It's absolutely borne fruit for them. They record all their safety meetings with their staffing. They document the hell out of everything. They manage the telematics to the point of bringing the drivers in and giving them a corrective form. This is what I'd like to see you change. So they're totally managing it. It's to me, it's like almost like VIP medicine, where if you just go to your doctor once a year, you're really not really managing your health. But if you're in a VIP health program and you're seeing him quarterly and you're doing testing and he's giving you advice and you're actually following it, I think you can massively affect the future of the business. If you do go up in price, you're not going to go up tremendous. You're not going to go up as much as the next guy. So, back to that brother-in-law. I mean, do you think the space is still a good space?
Or are you telling him to get out?
I mean, it's a tough business, right? No question. Put it this way, we don't do anything other than insure transportation here at Lancer, so I'm probably biased, right? We're into the end. What I would say I worry about in let's focus on passenger transportation is like I said, we don't control the costs. We're just in charge of kind of pooling them and reflecting them back into the risk pool. But it has been a long time, 14 years. And some of the, the pricing over the years, when I speak with our insureds, they're not lying when they say, this is very hard for us, right? This is creating a huge challenge for the business. So what I worry about is insurance being one part. Fuel is always a thing, but the driver shortage, right, where I think that puts upward pressure on wages for drivers, all the different costs that are going up for them. At what point do we start to hit, on that price elasticity of demand curve, right? Like at what point do we start to break demand?
Oh, we're
we're
there. We're there in certain segments.
Yeah.
We are absolutely there in sedans and SUVs because
Yep.
we lack efficiency and we lack technology.
Right.
So, in other words, if you could get if the sedan fleets in the industry were connected, and we knew that I'm empty in LaGuardia and I'm empty for the next 3 hours, I'm available.
Mhm.
The other piece of the puzzle is it is. But the good news is there are areas where the elasticity is still, there's plenty of room, but it's being ruined by people that don't know their financials and they bid things lowball to get the money off the table. I'll give you one example. There's a corporate shuttle program with a defense contractor we helped up in Massachusetts, where the operator was kicked off because the corporation checked his DOT and his DOT was suspended. And
Jeez.
and when they went out to bid, they were shocked at how expensive it was to get really solid operators. And I said, well, look, what's important to you? You know, you're putting 40 of your employees on this shuttle bus. Do you want a low ball number or do you want the best provider in the market that's got the best lines, the best insurance, et cetera? You're going to have to pay for it.
Yeah.
So there is some elasticity left and it's in the larger equipment.
Yeah, and I think that movement up the curve, you know, is a slow progression, right? I mean, like certain,
it is.
you know, like if you're, you know, a group from upstate New York, let's say, who wants to charter a bus to bring a bunch of people down to a Broadway show in Manhattan, I'm making up the prices, but like when that was 2,000, you know, for that trip, everybody's in. Be like at 3,000, you know, maybe it's you know, it starts to break down a little bit, and at 5,000, they're not going to do it. They're going to take the train. They're going to do something else. And I feel like we're biting away at the margins of some of that stuff. And that's what I worry about.
But I think one of the big things and being involved with, you know, the Chauffeur Transportation Association in Jersey, say that 2 times fast, and Mike Rose and all the people over there, you know, I think one of the other big things that we're dealing with is that we have a lot of gypsy operations that are not carrying the right limits, that are not doing what they're supposed to do, that are willing to take those trips at a much lower cost because they're not having to pay for these things to operate correctly. And I think part of what happens there is that kind of starts pulling on and tugging on the bottom of the market, and you start getting into issues. So I think what we found, and Ken, I think you'd agree, I think we also kind of seem to be in a storm, so to speak, where you've got all of these different elements that have all come together. We have kind of your gypsy operators. You've got kind of what's happened with the claims going up.
You have Uber.
All of it. Yeah, you've got Uber. So I think one of the things that I would ask is, you know, like most storms, hopefully it'll pass, but sometimes they linger. Is this something to where we see this passing soon? You know, and I know this is the tough question because everybody wants to give the fun answer, but you know, they've been going up for 14 years. As an operator, if you're talking to that brother-in-law, and again, you like this brother-in-law, are you warning him of, hey, I think it's going to keep moving. You better be ready. You better start planning for that to keep moving. Or do you see kind of an edge of a storm, or do you have kind of hope that at some point that'll slow down?
Well, I don't think I look at the environment as something that's going to pass, right? It's something, you know, that's definitely evolving. So, you know, the question is there still money to be made? And I think,
oh, absolutely.
You know, a lot of guys that you serve have proven yes, right? There's still parts of the marketplace, whether it's corporate work or shuttles, to where that high level of service is needed, and the, you know, the price is right, and they can still make money. And I think in order to continue that success, they have to buttress that, you know, or support that with all the things that we said, with the drivers and technology, and you know, all the things that Ken has told everybody about, you know, watching every penny is another key part of the equation. So yeah, I think, you know, the answer would almost be different for a lot of companies and markets. But in the big picture, what we're talking about are the luxury transportation providers, who I think have no doubt proven their staying power through what was the most, you know, insane period of COVID, right? Like if we can all survive that, we can survive anything, right? And you know, the thing that you would put out on the horizon right? Which I hate talking about, but you know, you have to, is like, all right, but eventually all the cars are going to be driving themselves, right?
Right.
And
Yeah.
that's going on, what, you know, probably 10, 12 years of talk about it. And we're still saying 10, 12 years. I don't, you know, I don't see any reason I would leave a business now because of that, right? I still think there's a lot of
No.
runway.
No.
And even then, businesses will evolve, right? I don't
Yeah.
see our industry going anywhere, even with self-driving.
Well, you have to evolve, right? I mean, there's still guys that build covered wagons and buggy whips, but many of them, that's how most of the automotive companies started, is they
Yeah.
used to be horse-drawn carriage companies. But at the end of the day, the disruption is also going to come shake out to opportunity. To me, the most important thing is you have to be financially viable to survive any of this. You
Yes.
have to know your numbers, whether you're a $250,000 operator or a $25 million operator. You have to brace for the storm. You know, owned waterfront property before, and at the end of the day, the values are still there, even though the costs are tremendously high, meaning the flood insurance, the wind insurance.
Oh yeah.
You know, so, but at the end of the day, you've got to be profitable to do it. So my answer when I talk to operators is, you know, some revenue is just not, some trips are just not worth doing. You need to know your profit margins and your
Yep.
cost structure, and you need to make a decision not to move that piece of equipment unless you're going to have a margin, gross margin of X.
Right.
You know, I have a great operator out in the Midwest whose motor coaches, you know, sit in the wintertime a little bit. I'm like, well, you get a couple of choices. You could certainly move them to southern climates. You know, there are people in Arizona looking for them all the time. He said, but if you put them out to your same client in January for 40% discount, you don't think they're going to be looking for that discount in June?
Right. Yeah.
So, and at the end of the day, you're going to put out a 56 passenger motor coach that you said you spent $600K for. You're going to put it out for that. And all that has to happen is your driver has to swipe one of those doors, and you're talking about a $20,000 loss. You can't move a piece of equipment for the sake of moving it. You have to move it profitably all the time.
Yep.
So, you know, we touched on a lot. Okay. And number one, we wanted you on here because let's face it, Lancer is the best in the business. You've got the staying
Thank
power
you.
in the business. You also have a tremendous commitment to the industry. So, you know, for all the operators out there, number one, don't blame your insurance carrier or your insurance broker. Now, having said that, there are brokers that work extremely hard for their clients. You need one of those.
Yeah. The broker makes a big difference, right? Just because a guy writes your home auto does not mean he has any business writing your
But
business.
your team is incredibly responsive. So you need an incredibly responsive insurance partner, but understand the reasoning that the commercial insurance is going up is the lack of tort reform, the nuclear verdicts, the cost of repairing equipment. So at the end of the day, if you as an operator are concerned about making a living, I don't think you have a choice but to put on that Apple Watch, cut down the cholesterol, and manage your blood pressure. And to me, even a few car operator should have telematics, and he should be managing it, and they should be documenting the fact that they know what their stats are. Okay, because to your point, the lawyers are really sophisticated. They're going to ask you the question of whether you have cameras and telematics. Isn't it almost worse to have them and not use them because it can be used against you in court?
It is. It's definitely worse. But in the big picture, you know, 15 years ago, or even 20 years ago, when, you know, drive cam started and, you know, we made a big push to get those out. And then all the iterations that came since, we've, you know, nobody can know every product that's out there, but we try to stay up to date on, you know, what all the different systems do. You know, even 7 or 8 years ago, it was big for us to see that somebody was willing to invest in that and be worried, you know, be worried enough about claims to do that. I would say, if you don't want to describe it this way now, you will have to within a couple of years. Like, if you're not utilizing all of that stuff from a safety standpoint, at the very least cameras and potentially telematics to manage everybody's behavior, you might not be able to get insurance at a certain point.
I think it's coming down to that, isn't it?
Yeah.
Well, and I think
So it's becoming more of a survival thing than
Right.
than like a luxury of safety management.
I think the
Yes.
other side of that, though, and this is something I see all the time, is I think a lot of people like the idea of I'm going to put in telematics and everything's going to be better, right? And I think
Yes.
when we talk to people about their safety programs and we're helping design safety programs, we look at it through a three-piece lens. The world that we live in of the training is the only proactive world you have. A camera telematics can only tell you what is actually happening or happened on the road. And I
Yep.
tell people all the time, it's great that you have a video of how that driver crashed. It's horrible you didn't train him well enough so he could have avoided it, right? And so I think at least in our world, we always tell people you've got kind of these different areas that you live in, and where we found the most effective companies, and Tim, I'm sure you've seen the same thing, the ones that have been most effectively able to manage things are the ones that have that proactive approach of we're going to implement a training program, we're going to do exactly what we need, and then we're going to use those telematics, those cameras, really as our gameplay footage, right? Best teams in the world, what do? As soon as the Friday night lights turn off, right there to the cameras. Okay, what do we get right? What do we get wrong? How do we adjust our training? How do we change practice next week to fix it?
They make safety muscle memory. They make
safety muscle memory. So I
Yeah.
guess the other thing for me is I think there's so many people, and I'm going to give you a compliment, Tim. You guys do an incredible job of this because you guys, a lot of people think, oh, well, my insurance company wants to look at my safety program. They're just looking for what I'm getting wrong. Your people, when they come in and they're doing these safety audits, are giving them advice, are helping them put programs in place, are helping them do things, right? I've gotten several emails where it's, hey, we met with an operator, they'd be interested in doing with this. We'd love to have you help them with XYZ. Here's a warm introduction to where they're taking steps to help that company run better. And I think that really kind of sets, in my mind, the right trend for the industry. And that we see operators with this idea of, oh, well, if I report anything to the insurance company, if I do anything at all, everything's going to adjust my rate. But I wanted to compliment you in that your team does a really good job in advocating and working with them. And I'd like to give you a second, if you would, tell us a little bit about kind of that process and some of the resources and the things you guys do, because it truly is something that sets Lancer apart.
Yeah.
Well, there's a bunch of stuff there. We have a big team of loss control folks around the country. And we believe sincerely that when you partner with somebody as an insurance company, right, we're selling you a promise that we're going to be around to pay those claims and handle those claims competently. Transportation is unique in that, it's highly regulated. It's a type of insurance that gets used a lot, right? And it's customer facing, which are all tough dynamics compared to a lot of different industries. So, all the value-added services that we offer, all of those people out in the field, they're doing two things. They are there to gather information, for us, like, do you have cameras? Yes or no? Do you have a safety program? Do you have, there's a lot of simple things. Are you compliant, with government regulations? That's a nice, box to check sometimes.
You'd think.
Yeah, right. So there's simple things like that, but there's other parts to it, right? Because we get to interact with so many transportation companies and see best practices at what works at one versus another and everything else, we have a unique ability to share that, right? And spread that amongst our insured base. All the lessons that we've learned over time. Most of those lessons learned through some pretty heavy scar tissue, by the way.
Yep.
So, why wouldn't we share that value with everybody that we have when it's, it serves both of our interests in keeping claims down. And then, the last part of it is, insurance is an unsatisfying product to buy, right? It's something you buy that you hope you never use. So the relationship comes into that in a big way, right? Because you might have an insured who, doesn't have any claims for a bunch of years and then has a big one. And when you have a bad claim and your company and your personal assets are at risk, that's a really bad day. You want to actually have a face to put to that, to know who to call and have confidence that when you call, they're going to show up and handle it and protect those assets and your firm's reputation and your people and all that stuff. So we try to build that bridge early on before the claim happens, so that when it does happen, everything, runs seamlessly. And for a line of insurance that gets used as much as auto and for as much of a crisis as some of the big claims can be, we've just found over time, it doesn't work as well any other way, right? And the only thing I would add to that is that, our claims handling is, one thing we didn't really touch on, which is probably the most important thing of anything in terms of survival for the long term.
Yep.
The same way these guys have to constantly evolve in technology they use and managing their fleets and everything, we have to constantly evolve to combat the plaintiff's bar on all these claims, right? So that's a long conversation in itself, but that's what we spend a lot of time on, and it's moving into data analytics and AI and all that stuff now, but that side of the fence is evolving just as fast as all the other things that we're talking about, and has to in order to stay in it for the long term.
Listen, which no doubt you are. There have been the carriers that have come and gone, and you guys are the castle in the industry. And so let's just wrap up a couple of things. If you're an operator out there, this is a must do, not a nice to have. This is a must do.
I think so.
Go all in on safety. Make it a part of your culture, as James said. Make it muscle memory. Don't just check off the box with telematics and cameras. Use all of the tools on a daily basis. The last thing I wanted to say is safety sells. If you have a client, you're doing a client presentation, and you're able to show all of the 5-star things you do across the board on safety and duty of care, and you're actually able to show documentation from the telematics system on safe driving and the things that you've improved in your business, that stuff sells to the right client. If you're dealing with a client that all they want is low price, and they don't care about the safety of their employees or their guests or their association members, I think you ought to think about not doing business with them. And safety is one of the value propositions that 100% sells, and we own it in the space. So I think everybody out there from an operator perspective needs to understand that if you are a safe provider and you are doing all of the right things and using all the tools, the results will bear fruit. And the corporate clients that pay the most, or clients in general that appreciate value, are going to take you more seriously than a fly-by-night operator.
100%.
I agree completely. I would add to anybody watching, you have to be very careful not to guarantee safety, right? Because that's not a thing in the world. But highlighting all of the preventative steps that you take,
correct,
are really what distinguishing you from the lower end of the market and the other options that people have for transportation. So I agree with that completely.
Tim, I think we're going to have you back on, my friend, because
at least once or twice.
We've got at least 10 more topics we could probably spend another hour on each. So
anytime, I'm in. I appreciate you guys having me, and I really appreciate everything you guys push out into the market message-wise through this avenue and also through the businesses that you guys have. So
thank you.
Well, we appreciate you just as much, Tim.
All we try to do is the same thing you guys do, Tim. It's add value. That's all we try to do. And hopefully the operators, that have got their wealth tied up and they really take this industry seriously will listen. So thanks again for joining us today.
Thank you for listening to the Ground Transportation Podcast. If you enjoyed this episode, please remember to subscribe to the show on Apple, Spotify, YouTube, or wherever you get your podcasts. For more information about PAX Training and to contact James, go to paxtraining.com. And for more information about driving transactions and to contact Ken, go to drivingtransactions.com. We'll see you next time on the Ground Transportation Podcast.